Hello and welcome back to InsurePulse.
Hi, everyone. Great to have you with us again.
A lot of people focus on startups and big companies when they talk about India's growth story.
True, but if you look closer, the real engines are the small businesses. The MSMEs keep towns and cities running every day.
Absolutely. They manage local production, small exports, and provide countless jobs.
Exactly, their impact is huge. But there's a flip side. They're also one of the most financially exposed parts of the economy.
That's right. I came across a study recently which said that 60% of small businesses that suffer a major uninsured loss never reopen their doors.
60%, you say? That's really a lot.
It is, especially when you consider that after COVID, around a third of business owners said they wanted stronger protection.
So the intent is clearly there.
Yes, but in practice, many businesses are still operating with gaps. And when that happens, one unexpected event can suddenly put the entire business under pressure.
Almost like walking a tightrope without a safety net.
Exactly.
And interestingly, one issue that quietly creates problems is how assets are valued in insurance policies.
That's an important one,
Many SMEs insure assets at market value.
which sounds reasonable at first.
It does, until you realize what actually matters is replacement cost.
Yeah, because machinery that costs 50 or 60 lakh 5 years ago may cost much more today.
Exactly. And if the policy hasn't been reviewed in years, the coverage slowly falls behind the real value of the assets.
Well, the tricky part is that nobody notices this gap until there's a claim.
That's exactly what happened in that manufacturing unit we discussed earlier.
Yeah, the one in the industrial cluster where the workshop caught fire.
Yes, the fire destroyed machinery worth roughly 1 crore rupees.
And the owner did have insurance in place, which sounded reassuring at first until they look at the numbers.
Exactly. The policy covered only 60 lakh rupees.
So the property was underinsured,
The sum insured had been reduced earlier just to keep the premium lower.
something many businesses try to do, thinking they are saving a bit of money.
But that decision can come back to haunt you when a claim happens, because that's when the condition of average applies.
Right. Since the property was insured for less than its actual value, the insurer paid only a proportion of the loss, which meant the full 1 crore loss wasn't covered.
Not even close. The owner still had to arrange around 40 lakh rupees. And that's not a number most businesses can pull together overnight.
Yeah, exactly. They ended up taking a high interest loan just to replace the machinery and restart operations, which meant the fire didn't just damage equipment.
It strained the company's cash flow for months afterwards.
That's the real takeaway here. Insurance should be treated as capital replacement,
True.
not just something you buy to tick a compliance box.
And sometimes the bigger risk isn't the damage itself, it's the downtime that follows.
Yes, exactly. Remember the e commerce startup that was in a soup during the monsoon?
Ah, yes, of course.
The racks and sorting equipment were damaged, and the fire and special perils policy covered the physical loss,
Yes, so the asset damage was insured, but operations stopped for nearly 30 days while repairs were carried out.
which meant orders stopped immediately. Revenue paused overnight.
Yes, but the expenses didn't.
Salaries, warehouse rent, logistics contracts, all of that continued. And if you remember, the impact during that 1 month was around 25 lakh rupees,
Yes, lost revenue plus fixed costs. And none of that was covered because there was no business interruption cover attached to the policy.
which is something many SMEs overlook.
Yes, and it highlights an important point. When businesses think about risk, they often focus only on physical damage.
But disruptions today aren't limited to fire or floods.
Exactly. Increasingly, business interruptions can also come from digital threats.
Yes, cyber incidents are becoming a serious concern for smaller businesses.
In fact, recent cybersecurity studies show that around 43% of cyber attacks globally target small and medium sized businesses. Yet many SMEs still operate without cyber insurance.
Which means a cyber attack can shut down systems,
Mhm.
interrupt operations, and create financial losses almost overnight. And just like with physical disruptions, the real challenge is often how quickly the business can recover.
Exactly. Without the right protection, even a short disruption can create long term financial strain.
Fires, floods, accidents, none of these are things businesses plan for. But the financial impact that follows is very real.
And as we've seen today, the difference between recovery and disruption often comes down to how well a business is protected.
If you want to understand how businesses can protect themselves against these kind of risks, you can visit Mahindra Insurance Brokers Limited at www.mahindrainsurancebrokers.com to learn more.
Because growth is important.
And resilience is what keeps the growth alive.
Thanks for listening.
Tune in for the next episode of InsurePulse. Goodbye.
Bye bye.